The dollar did fall today, but not when the interest rate decision was announced at 2:30 p.m. It fell after the retail sales figures came out, and then again at 3:30 for some reason. And it's now around 90.7 US cents. It's been trying to go below 90 for a few days, but can't quite get there. And the Reserve Bank repeated its previous comment that the dollar is still uncomfortably high. In fact, this month's whole statement was virtually identical to last month's, straight off the word processor. Retail sales rose a better than expected 0.5% in October. The largest rises were clothing and cafes, and the biggest falls were shoes, newspapers and books. And although there are quite big differences between those categories, the broad story about retail is that the GFC basically caused sales growth to almost halve, from 6% to 3.4% on average, and it hasn't come back yet. Today's other economic data were balance of payments figures. The deficit worsened by more than 5%, and net foreign debt increased by 4.5%, or $36 billion to $829.1 billion. Overnight trading saw the European and US markets fall by about 1/3 of 1%, while Asian markets were mixed today. Commodity prices all fell, and the local share market followed Wall Street down. GrainCorp fell again. Resources stocks were sold down because of the falls in commodity prices, except for Whitehaven Coal, and banks went down as well. Now, in normal times, investors discriminate between various assets, but in times of crisis, they dump everything, which means the correlation between asset classes rises. Now, this chart of the correlation between global shares, commodities, bonds and currencies shows a rising trend all the way from 2006 to 2012, and then a sharp fall this year. So markets are back to normal. And that's finance.